And we're live. Okay, so recording a live session here about midway through the trading day on Monday. And this is a live session in the lab, and we're currently in a position. We've got half the screen in system trading mode. The other half is in price action trading mode. And I'll get into why that would be the case coming from the systems trading guy, maybe in a little bit if you guys want to. But I had a question from Lady Dynamo asking about, she said she struggles with when to take exits. I assume what you're talking about is when you're in a long position. Let's say you're in any position and it starts heading in your direction. When do you take profits? Because sometimes you'll get into a trade and it'll go about this far, and then you'll start looking to take profits and the thing rips to, new all-time highs. Is that what you're referring to? Yep. Okay. So she's typing. Okay. And then another time when you're thinking you sell too early. And then another time that you're thinking, okay, this time I'm not going to sell too early. I'm going to hold on to it and I'm going to squeeze every last ounce of it. And it turns and goes against you. I imagine that's the other, you sell too late. This is obviously not a unique situation to you. It happens to all of us. Excuse me. So there's a couple of different things we can do here. One way is to identify the trade setup that we're taking. When we're looking at, so I'll leave this up, but let's look at this Aussie CAD trade that we're in right now. So this is a failed vol breakout strategy. And because of the back testing we've done on this one, we know that 1.2R is the ideal rate place to take our exit. And because it is a mean reversion trade. So mean reverting trades, those aren't the trades that rip to new all-time highs when, you buy them. Rarely when you buy down here, do you get to hold on to the whole thing. Mean reversion trading is, in essence, breakouts that fail over and over and over and over and over. And so what you want in a mean reversion trade is you want to buy it where it starts heading in your direction, convincing you that some sort of buying is about to happen. And if nothing else, when it starts heading in your direction, you start being able to take advantage of that. And most likely what's going to happen is it's going to come back into a position where previous breakouts have happened and it's going to test that sort of stuff. We call it like a value area where everything is valued perfectly and priced perfectly, and volume is pretty low, meaning a price is just going to bang around sideways. And then usually what'll happen is it'll look to extend a move in one direction or the other. So if we can categorize our trades as mean reverting trades or trending trades, breakout trades, there's in essence three types of trades in existence when you're talking directional trading. I'm not talking about volatility, and I'm not talking about R, math, quant, pairs, and those sort of things. But what I'm talking about is directional trading. And when we look at directional trading, we have three types of trades, and they're all stem around a breakout. So a market is always intending to break out. It's always attempting to break out. It's always trying to break out to new highs or to new lows, or to break back into a position to retest an old position. So 80% of the time, a breakout, it fails. So it doesn't actually do anything other than break outside the line and move back inside. For example, Euro is a great example of that right now. As we can see, it has attempted to do this 120 a lot. And every time it does it, it tends to fail. This is a daily chart on the Euro. And we can go back and you can see that the 120 level is actually somewhat prominent. There's a bit of drama around this 120 level, as you can see. It's got that big round number sort of situation. So it's either breaking below it or breaking above it. And you see over here where it was just doing a lot of banging around in that area. We've done that right after. So this would have been COVID bottom, rally up to it, pull back down, retest it, and right back up to it. And so I'm sorry, this would have been the COVID bottom over here. Looking too far ahead. So right now what we have is pretty much a sideways market here in the euro. So what we would be looking to do in this one is these attempted breakouts have failed a lot of times. 80% of the time they fail. So we're going to look at way more opportunities. If you've got 80% of the time a market is going to fail, you're going to have a lot more opportunities to trade it. But this is the problem, because people want to trade this whole end-to-end sort of situation. They want to catch all of the move, right? We want to buy down here at the 95 area, and we want to sell all the way up at the very top up here. Now you can try to do that, and that's fine, because there's plenty of examples in the past where it's been able to happen, but you lower your win rate dramatically. If you had if 80% of the time you had a setup that, meaning a breakout, would go to about this midline, so 1.5, if it would go about to that midline, then you know that you have a very high win rate strategy. And holding on to these big moves doesn't really grant you a whole lot of opportunity, because it's just, everybody's trying to do this move here, right? And what markets are going to do is they're going to pull volume out of the market. They're going to seek commissions. They're going to seek volatility. Volatility and volume is fuel for a market. And so generally, because of everybody wanting to catch a big move, people are going to look to, they're not even going to realize that this thing is happening until it starts heading out there. So again, let's start out with the first one. Is markets tend to break out, are always attempting to break out or break down. 80% of the time they fail to break out. So only 20% of the time do they actually break out and then trend from there. And the reason that's important is because it doesn't become obvious that a market is actually breaking out until it's done it much later. Let's look at, hold on. Let's get to Bitcoin. For example, today we've hit new all-time highs on Bitcoin. And then of course, let's just take all the training wheels off. So new all-time highs for Bitcoin. It wasn't obvious to many people until about $13,000, $16,000 that we were really off and running, right? So the real breakout would have been in this general area. In reality, it happened back in March on our monthly chart. We have the buys all in here. So it doesn't become obvious that we're breaking out. This looks like mean reversion sideways trading, right? On this time frame. If you go up in time frame, pretty much you can always identify a trend or a mean reversion in any time frame. If you go up in time frames, you can start identifying the bigger move behind it. And I'm not saying that you would have caught this move, but the March bottom put in a failed breakout to the downside that got reversed, and we've been long ever since. So we've got that move down in this general area here, down at the 7,300 or so. And we've been able to catch it the whole way up, adding to positions all the way through. Even though it looks like a sideways market, markets are attempting to break out and failing a lot of the time. But this is what's happening now, right? We're out of that. So the next type of breakout is a breakout that breaks out, holds the breakout, and continues to run. Okay, so they become obvious to people later on. And in that sort of environment, instead of taking profits at a profit target, what you want to do is you want to be looking to raise your stops, giving it a wide range, because we're getting into the bull volatile, the high volatility range. Look, that's a 10-15% sell off. This is a 6 to 8% rally. The move from 10,000 to 20,000 happened in about a month, a little over a month. So we're in a very volatile region, right? And in this sort of environment, that's what you want to do. You want to give it room to go. Now, a lot of people probably and certainly did that, and they got stopped out up here because they don't understand the incentives of certain markets. Certain markets have scarcity. And so that market has a constant bid no matter what, because there's only going to be so many. And that's the same with equities, right? With equities, there's just so much, there's only so many equities involved. Yes, you have options to go along with that to cause a different level of inventory out there. But this is why equities tend to go higher too, because there's scarcity. Whereas with currencies, you don't have the sort of scarcity right now. So when we're looking at trading, if we identify we're in a trend type of trade, then we want to trail stop the trade as opposed to taking profits at targets. If we're in a failed breakout trade, then we want to take profits in a position where it's easy to get out. So back to the Aussie CAD trade, we got long this one. Now we'd be looking to get out in this general area up in here, right? It's going to be a lot easier. And you can see there's some resistance. This has been a spot recently. So if it does move up into that area, we're probably going to be able to get out here. And we know that over the course of 1,000 trades, 75 of them or so are going to be successfully exited. They're going to hit right here, and they're likely going to hit at least right here. So what we want to do is we want to start getting out here, because on a lower time frame, that's when traders are going to start realizing, oh, we're in a trend, right? And that's what I was talking about in the Bitcoin side. That Bitcoin trade is that people realize late to the party that you're in a trend. And then so that leads us to the third type of trade, which is entering into a trade, but a late time trade, or a late in a trend, because it's hard to enter into these trades when it's already $18,000 and $19,000. Not many people are looking to buy at $18,000, $19,000. Notice that we did troll top at the 19,666 on Bitstamp, or the 20,000 level, roll right up there and suck people in. There was a lot of selling that happened on this one today around that 20 low. You see, we got as high as 19,864. Previous high was 19,666 using the Bitstamp data feed. And so we broke above it here, high 19. Okay. So this candle, 19. Okay. So this candle was the one that broke the all-time high, 19,666. And it looked, and it start that now you see people had, they had the shorts. So some people said it's never going to go higher. It's never going to hit new highs ever again. So I'm going to short it with my stop up at that level, right? That's what people did for the last couple of years. Now their stop would have been 19,667 or so. 19 or 20,000 is probably going to be a stop as well. Also 20,000 is where people are going to take profits. But because of the scarcity of this asset, that's less interesting. People, it's just going to keep going. So the way we want to take profits on a trend trade is we want to trail stop it. But ideally, what we're looking to do is we want to keep adding to positions, which is what we have going on in the NASDAQ trade right now. Got in down here at the first, added here, added again. So we're continuing to add as we move up into that. And the reason that we're adding on this one is because we're in a bull quiet market regime on the daily. That tells us the weather. That gives us all the information we need to know about this, because in bull quiet, we know that the best looking sell setups in the world, which is what this looks like, just fail, and you troll out the bears all the time. So you can be, it's a lazy way to be right. Instead of having to be the most detailed right all the time, it's a lazy way to be right, knowing that happens. So in essence, in summary, time to vest up, by the way. I'm about to get invested. I'm a new father, so I can do dad jokes all I want. I've been approved. So when we're looking at a trend trade, we want to raise stops and we want to add. So on this one specifically, now we're going to raise our stop. We're going to lock in about 1/4 of an R. We're already up 1 R on that first trade. We're going to be up about 1R on the previous trade. So a total of 2R here. And then we just add it again. And when we bring our stop up, that'll give us some pretty good profit on this one. Did I get, thank you, Kyle, big time that joke. Did I address your question, Lady Dynamo, or would you like me to drill down a little bit further on that? I'm happy to do so, by the way, if you guys, or if anybody else has questions on the subject, feel free. Okay, so feel free to answer that. So you got it. So one thing, the reason that I get, and this is something I get all the time with traders, is I'm the systems trader guy, right? Like everybody, that's like my shtick. How am I trading price action? And I will talk about that because it's from the systems trading and the back testing, the manual back testing of going bar through bar, of figuring out what's going on. And, you know, when you do, so I do an hour a day right now of manual back testing, meaning I go back into some random point in time. I choose a chart and a symbol, and I start manually going bar to bar, figuring out what the setups are, and you know, where's my entry, where's my take profit, and I start collecting all this data. So what I'm actually doing is I'm rewiring my mind, and this is why we start with the failed vol breakout strategy for everybody. The reason we start with the failed vol breakout strategy is because most people see a trend. Most people want a trending market. If you haven't done the work, you haven't done the research, you haven't done all the thing, everybody wants to be in a big trend, because if you turn on CNBC or Bloomberg, if you read any book that is, you know, about somebody who did some heroic action in the markets, it's all about a massive trend where they caught the beginning of a big trend and they just kept, you know, threw caution to the wind and just doubled up and threw all their money into the market, and they catch, you know, they turn a small trade into a multi-billion-dollar business, right? That's the story everybody talks about. That's everything everybody talks about. And so the thing about it is everybody's chasing it, and they're leaving the easiest trades in the world, the failed vol breakouts or the failed breakouts, they're leaving those available. So professional traders are very happy to trade failed breakouts because they move from low risk areas and they move back. So when you break out of a range and if it fails, it's a low risk entry because you can catch the move back to the median, right? So when you're price action trading, you're guessing what's going on. Now, if you're systems trading, you're identifying these patterns that happen over and over and over. And suddenly, after you do 100 trade back tests, you're like, you know what? I saw this thing happen a lot of times, and it looks like every time this happened on my setups, I got better results, or it went further, or, you know, I got trolled and stopped out again or something, right? So you start identifying these characteristics. So if you spent an hour a day, every day, doing that for a week, you're going to feel pretty good about your knowledge. You're going to feel pretty good about yourself, and you're going to know a lot more of what's going on. If you do that for 2 weeks, you're going to be twice as much, 3, 4, whatever. I've been doing it for 15 years. I still do it every day. I still spend an hour a day manually back testing ideas and strategies and all these things. So if you're looking at a market, always wondering what's going to happen and why some people can figure this stuff out or why people are making money and you're not, there's a reason behind it. It's because most people are not willing to practice. And manual backtesting is literally just practicing. So if you're a professional athlete, say golfer, would you just go and play golf tournaments and not practice ever? This is kind of the meme that we have in the market is, you know, paper trading and manual backtesting is fake. It's not the same as real trading. And while that is true, you still should be practicing. It's like saying to me, hey, Chris, you're going to go play LeBron James one-on-one. The reward is $1 million for either one of you. Do you think that LeBron if he knew $1 million, well, maybe $1 million is not that big a deal, but to him, but if there was $1 million on the line, you think that people would be, I won't make it worse versus LeBron. That's right. But I would have at least a fighting chance with LeBron if I practiced, right? Now, Kobe Bryant was famous for practicing 4 practices a day. He would wake up at 3 a.m. so that he could be at the gym at 4 a.m., knowing that if he did 4 practices a day, most every other professional NBA player is doing 1, maybe 2 sessions a day. He's doing twice everybody else as a reason he was so good. And so in trading, we have this ability to go back and manually go through every single bar for 150 years, if not further. There's data out there. And we can go through the bar and figure out patterns. We can figure out different market regimes. We can figure out different strategies. All you have to do is practice them to become good at it. That's how I know when to get into a position on a price action setup that's different than a strategy, than a system setup, because I've done the work so many times on these that I know where I can just get in low risk areas and at least add a couple of bucks to my account. And see how we're doing that on NASDAQ. We kind of like a magnet or moving up to this spot. We moved up to that spot, and now this next level is the thing that's going to be in play for the NASDAQ, that 12,240. So anyway, the idea behind practicing and learning a failed breakout strategy is that 80% of the time it works in your favor. And the thing that makes it so good is all you have to do is figure out the average distance that it travels, if that gives you an edge or not. And so when you're trading a failed breakout strategy, you want to take profits because that's where the easy money's at. And you're going to be taking 1.2 to 1.5 hour profits 70 to 80% of the time. Not bad business at all. Now, when you're looking at breakouts, 20% of the time they actually break out. So if you're just trading every breakout, you have a 20% win rate. You want to start looking at ways to make them, excuse me, to make those more favorable for you, so that you're eliminating 80% of the breakouts that fail, and you start identifying ways to take the ones that do start working in your favor. So again, the reason why, now back to the reason why we use the failed vol breakout and why it's the first one I always teach in the Consistently Profitable Trader. In all the courses, it's the first one I teach and the one I trade professionally, and the one we're using to try out for all the prop firms, is because the more you practice it, the more you rewire your mind to not go chasing every breakout. Most traders want to chase every single breakout, and what's going to happen is they're going to end up leaving all the money on the table because they're doing breakout, and they miss it. And after about 5 or 6 failed breakouts and you're getting stopped out, the last thing you want to do is take another breakout. And usually that's the point where the breakout actually happens, when the least amount of people are there, when they've ran the most bears out and the most bulls out, stopping everybody up and down, then it rips. So that's when you have everybody on the sideline. There's very few people left to buy or sell because they're just not interested in it, because they've been stopped out so many times. And it just doesn't take a whole lot of volume to rip a market higher. When that happens, then both bulls and bears are on the sidelines, and they're going to start chasing. And that's when we get into a late entry into a trend. And those are the lowest win rates. And those are the very hardest ones to get into. But that's why we use something like the VBO2, which is something that gets in on after a trend has been established, it gets in on a nice pullback. And we use the position sizing tool, basically both things that we learn from failed vol breakout and vol breakout. We use ideal position sizing to help us take advantage of that sort of trades. All right, I got a few questions in here. Let me step back and take a look. If we trend trade like the NQ and eventually we end up using market money, how do we position size as we go into adding positions? This is a hard one. In this one, for example, I'm using more of a shortcut to do it because it's a little bit harder to use the market's money. Now you can definitely do that. It's not that hard to put together the math. You say, okay, we've got, one contract, we size it. Now we're here, we've starting to move into our place, raise our stop. Now you can say, what would our second position be? Let's say it's 3 contracts. Okay, I'm gonna go ahead and add 2 contracts to have my 3 contracts, move my stop up here, another breakout, add our stop in there. So because I'm moving so quick on them, I don't size appropriately in the more specific side on that. I don't know if that really gives you the answer, but that's how I do it because I'm moving quick. I need to kind of ballpark the positions. And that gives you, a lot more ability to get into the trades quicker, and then you can kind of clean them up. So if it says 3 contracts and I'm only in 2, I can come back and add 1 more contract to clean it up. Jonathan, Euro, if I wasn't starving for sushis, oh man, I wish I could use some sushi right now, buddy. The +5 points were there. The NQ trade working nicely so far. Practice is key. You won't make it versus LeBron. Jonathan, I think I will make it versus LeBron. I don't know if you know how good I am at basketball. Just want you to know. Pretty good. Just kidding, buddy. Questions? If not, I'll cut the recording short so that we can get back to business. The super secret stuff we're doing here. Cool, that looks like it. All right, thanks everybody. This is just a quick video, kind of showing what we're going on about in the lab. We're still, those of you in the lab, don't leave. We're still trading. I just wanted to knock this one out, give people an idea. Joke aside, I know I was a track athlete for 15 plus years. Oh, cool. I ran a decathlon. What's a Forex? It depends on what I'm trading, Diana. So if I'm trading the daily chart, if I'm doing daily swing trading, practice is a key component of success. Exactly. So Diana, I trade the vol breakout and vol breakout 2.0 on daily charts for swing trades. Currently long NZD CAD on that one. I prefer not to trade breakouts as they are low profitability trades. They're lower win rate. Basically, you lose most of your money if you're trying to catch those until you catch one, and then you make a bunch of your money back. So I try not to trade many breakouts. That's a newbie type of, that's what we're trying to do here. Not newbie, I should say, but that's what we're trying to do here is train people not to go for breakouts first, get into the failed breakout mindset, and then step back into, so the idea is that you show up learning, thinking breakouts are the most important thing, realizing that you're going to lose the majority of the time on a breakout, getting into failed breakouts. And when you get into failed breakouts, then you rewire your mind with, as Jonathan's talking about, with practice, doing the failed vol breakouts, you rewire your mind to see failed breakouts instead of a breakout at every moment. If you're always seeing a breakout, you're always looking for a market to see a breakout, you end up getting stopped out the majority of the time. Yeah, there you go. So the first course I bought talked about breakouts. Most new traders will run for the breakouts, and honestly, it's kind of like it's a holy grail thing that everybody really wants to do. Your mindset has to be correct for it. You have to understand that you're going to get punched in the face 5, 6, 7, 8 times in a row before you actually catch a good breakout. And then you're also going to get punched in the face when you sit in a breakout too long for it to go against you. And then you're also going to get punched in the face when you exit early, thinking that you don't have a good breakout, and it actually turns out being a good one. That's the thing about most setups, is the hardest ones are the ones that are the best. The best looking sell setups in the world fail. That's a awesome breakout. So, okay, John. So hold on, let me get to it. Gunships, I'll get to that. So when you do, so earlier this year, I traded NASDAQ and I caught the breakout on NASDAQ. That was price action based. So from basically from April 5th until the top we called the last week in August, which we freaking nailed, was all based on price action. And that was a trend that we got into, and we lucked our way into it. And it just kept giving us that. So it was an easy trade to be in. And those are the best trend trades, the easiest ones to be in, because you get in using some good fundamentals, some good price action fundamentals, some good edges that keep you in the game, and then you just keep adding to the trade. Those are the best sort of trend trades, whether you're looking at a 5-minute, an hourly, a daily, weekly, monthly. So I don't have an ideal time frame to trade on trend trades, breakout trades, but I guess a better way to answer that is I build systems and I trade systems based on how I want to live my life and my time constraints. So I have the day to do intraday, to do day trading now. So I use it to my advantage. When, we didn't have full-time nanny and things were a little tough, or I was traveling the world all the time, end of day swing trades were doing pretty good. This year it hasn't been too good for that. So having an intraday day trading strategy is very useful there. Okay, let's see. Gunship's performance showed that mean reversion provided more setups and paid the most. This is okay. So this is a great example. Kyle and Grant put together the Gunship strategy, and it initially was created to be, correct me if I'm wrong. I don't want to speak for you guys because it's your strategy. You guys are, the proprietors and the owners and creators, and you're going to, help people with it. But I'll let you guys share it when you're ready to. I'm not going to give away any information here, so don't worry. But their initial, there we go, on NASDAQ. Their initial premise on Gunship was that they were looking to trade a breakout swing strategy. And they were looking for a reason to do it. And they had a pretty good method. It's still a pretty good method in the swing sense. But from what I understand, again, it's your guys' stuff, so I don't want to speak for you. But it turned out that even though you were chasing the swing strategy, that the failed breakouts, pullbacks and breakouts, mean reversion provided more setups and paid the most because you were able to do it. Am I correct on that one, gentlemen?
Yep, that's correct. So we discovered that initially the system was a breakout pullback strategy, and we noticed the potential mean reversion component. And knowing what we know about mean reversion, we added that to the overall system. And the 2020 results were, I'll post it in the Slack so people can see the breakdown per setup. But the mean reversion portion of it, far outnumbered the pullbacks and breakouts, and was by far the higher, the performance was fantastic compared. I mean, don't get me wrong, the pullbacks and breakouts are also high SQN setups based on how the system identifies them. But the mean reversion was amazing. It was great. Grant, I don't know if you want to talk about it more.
Well, mean reversion made up 70% of the trades roughly. Pullback made up 20. And then what we consider a breakout, which isn't a real breakout in the sense of what everyone's picturing. It's not a breakout versus on support and resistance. It's not that type of breakout. But only made up 10% of our trades. So while both have really high SQNs, like the pullbacks and the breakouts have an SQN of 6, mean reversion, we only have an SQN of like 3.5 or something like that. But part of that is because the number of trades you get a year, it's not as selective. So
for everyone in the live stream, it's in the backtests portion of the Slack, Pollinate Slack, so you can see it there, breakdown.
Yes, a good question about the breakouts. Did your data replicate the typical 80-20 split of breakouts, or did you have a higher win percentage on the breakout?
Our win percentage on breakouts are 73% right now.
Wow.
But like I said, it's not what you're thinking in your head. It's not some support resistance breakout or something like that. It's very, very different. It's just an Kyle, how would you explain it?
Could you give an intuitive explanation?
Yeah,
it's just
so
of indicators.
Yeah, so what it is basically it is that. So if you were to look at it without the indicators, right? And I mean, the indicators just like the FUBO system, they're just training wheels. They just help us. It's a way for us to train our eyes to look for the setups quickly. If you're doing end of day, we can go through the end of day pairs that we trade and we can find the setups quickly. That's what it helps with. But without them, the breakout trades, it would have shown a breakout, but it helps us with getting in with timing the entry basically. That's why we refer to it as a breakout. And in its initial iterations, we used 2 different average true ranges as a means to tell us whether we should be going long or short. And so that's where that term initially came from. The system has been modified since that iteration. Like this is like the 8th version of our system here. So this would have been in like 2nd and 3rd versions where we were using those. And so when they would flip, it was because price had traveled so far that it was able to flip the average true ranges. And that's why we referred to it as a breakout. Although present day, we still refer to it as a breakout because of the indicators signaling it to us. But technically speaking, the breakout occurred and the entry is really entering off of a retracement basically, but not on the retracement, on a breakout of the retracement. Once we kind of disclose some more about it, it'll make sense. It's kind of confusing to hear, I'm sure. But yeah, the performance has been great. We've been really, really careful with, so the pullbacks and breakouts, we enter on very specific, there's a very specific reason we take them. That's why there's so few of those trades, but the SQN is really high relative to that. So.
And what's the difference between your R from the mean reversion trades and your breakout trades? So if your R, take profit R on the mean reversion is maybe 1-to-1, and is it on the breakouts 2-to-1 or even higher?
Well, our system's a little backwards with that too. Okay. Our take profits on trend trades, which are the pullback and breakout trades, essentially we just take 2 R profit targets. Mm-hmm. With mean reversion, our take profit is pretty variable and could be pretty large, pretty far away.
Okay, is it
It's
based on discretionary on the situation, or?
No, it's just based on the size of the candle and where
Okay.
midline is.
Okay, gotcha.
So
guys, I'm gonna raise a stop up on NASDAQ. Actually, I'm gonna tighten it up here to 12,222. Sorry, low 12,202. So that locks in decent amount just below the last entry. So or our second entry, I should say. So that'll at least lock in a little bit of profit altogether, because this is kind of getting to the double toppy point here, and we are hitting that range that should be potentially a little bit of weakness. So just wanted to lock in a little bit of profit.
and then the other thing we're finding out is that mean reversion is a little finicky. So when it works for a really, really long period of time. But then you just have years where it's like you can't catch a break. Which is kind of why we started with a trend system anyways, trying to build a pullback or a trending system.
Yeah, so with the mean reversion there, just to follow up further, it's the good news is, and we haven't done deep enough back tests with the mean reversion to really say for certain yet, but what we've found in the initial, like going deep now, building out huge amounts of data for each currency pair, we're finding that, yeah, you know, in a bad year, you're not losing money. You know, you're not, you may be up 1R overall on the mean reversions alone, but the pullbacks and breakouts make up some of the difference there. And all that really means is that, and just so people are understand too, the mean reversion trades, there is no management. This is a binary. You buy it, you leave it. You can either get stopped out or you hit your profit. So we haven't even done some tailoring there, and there's a lot of room to work with there. So yeah, it's been pretty good building it out. A lot of fun, learned a lot.
Yeah, with some basic rules. Like we let 2R winners on mean reversion trades become complete losers. -1R losers in the back test, which we're not going to do in real life. So we're going to come up with a new rule set and then apply that rule set to our existing data to see how it improves or hurts performance.
Cool. So this is, let me kind of take a step away here and frame this for you guys. So Kyle and Grant and I have been working together for a couple of years. Kyle for the last year, and we kind of, they've done the rewiring of their mind to eliminate the idea of like every trade's a breakout. And they've built the foundation of doing thousands of manual back tests to where they start understanding where opportunity lies in the market, right? This didn't come from being born brilliant, no offense, guys. But I believe it came from really hard work. And when you're cranking through charts, 100 trades a day or however many they've been doing, you start identifying different characteristics. And you naturally, my upbringing and every experience I've had in life is going to influence a lot of things. As Ben Tharp says, your beliefs about markets or what you trade, it's not the market you actually are trading. And so what they've been able to do is, first of all, trade the the base strategies that we have here really, really well, and test them in such a way that their knowledge of that stuff has been like a foundation is there, right? And so it's then that you grab that foundation, and then you know, they take their own knowledge of things or their own thing. They don't have to worry about, you know, I had to worry about thinking of coming up with this strategy. They learn it, and then now they can say, okay, now it's my turn to find their FBOs are a gateway drug. Exactly. It's to get a certain foundation, rewire your mind from seeing certain things, and then they have the foundation of how to do manual backtesting correctly, and how to categorize markets, and how to categorize the different characteristics of different types of setups and everything, and put their own twist to it, their own belief system, and their own, you know, even if you look at their charts, they, you know, they have different colors on them, right? Everybody kind of, you know, has their own little way of doing it. And yeah, so they've done, and this is why they're, you know, this is why Kyle's doing the mentoring an hour before we go live, getting people caught up to speed on how to do the manual backtesting, how to, you know, how to go through things, how to walk through them, so that we can get people up to speed on trading them. And, you know, ultimately what we're trying to do here is we're trying to get traders funded and in prop trading accounts. You know, I don't know, there's a couple $1 million level where you might think to yourself, maybe I don't need a prop account here, but I don't think that's the, I think trading prop account, like if you had $5 million, well, you know, you say, I don't want to trade prop account. Well, if you take that 5 million, you put that in like a swing system or an ETF or like a long-term position to hold and preserve wealth and capital, you can get a $2 million account to trade and make pretty good money and continue to add to that big account. But the point being is, when you do enough reps and you get really good, then going out and building your own strategies happens. But a lot of people won't do the hard work initially to wear it out. And you know, I know Grant's been playing with a lot of different strategies over the years, in addition to doing the work on it, which is what gave him the ability. A lot of people have that idea of, you know, I want to be my own mind. I'm not going to use a system that somebody else has. And that's not the point. You know, the point is to give you a system to get you to a point so that you can go from, you know, the first level to the second level, right? So that then you can start adding to your own stuff and people can start adding to there, because that's where the real work needs to happen. The real work doesn't need to happen on, you know, you don't need to start there, I should say. You need to start at a place where you can build a solid foundation. And from that solid foundation, you can then add on top of it. But if you don't have a solid foundation, you're just going to be chasing things around. We have an example here. I had to realize that I don't have to trade what's hot, like pot stocks or SPACs. Yeah, you don't. A lot of this, and this is a lot of the perspective is you just got to be in a good trend and it'll take care of itself. Well, that's really poor trading and horrible advice. Because what happens when there's no real good trend, or what happens when you miss the trend, or as happens, you're chasing breakouts that fail constantly. You blow up an account, especially if you have no foundation to build on that. There's nothing wrong with trading SPACs or pot stocks or Tesla, Nikola, you know, any of that. There's nothing wrong with it. The asset you're trading is less important. The time frame you're trading is less important. But if you have the framework to identify and categorize, it doesn't even have to be the same as failed breakouts, late entries, pullbacks. It doesn't even have to be the same as that, but you need to have the foundation to build on top of it. And if you without that, you'll have a big miss. And you'll end up back at, the very beginning again, which is back to where you're like, oh crap, I don't know what I'm doing. I thought I knew what I was doing, and there's no shortcut away around the manual back test. That's look, I 1,000% agree with that. If you want to get really good at trading, the only thing you need to work on is, and granted, this is a little maybe selfish here, but you just need to do the failed vol breakout on a daily level, and you just need to spend an hour a day doing it and get your own spreadsheet and start doing it. It's just the practice that needs to be done. All right. Okay. I had a question up here. First entry on NQ says use small initial size. So the way I do intraday price action trading, John, again, this is the only reason I'm able to do this sort of stuff is because of like what we're talking about, the, massive amounts of manual back testing that you do to build up that, that muscle to learn, to understand what a market is doing. Without that, you're kind of just guessing on a lot of things. And so the way I do it here is that would be a way to do it. Add first, add, then half, then a full position. That's a fine way to do it. I pretty much am hoping to get a full like 10 to 20 contracts in the NASDAQ. This failure right here should be, if this one fails, which looks like it's doing, I'll be raising my stop up to just under that one, and we should break pretty good from here. If this ugly troll top fails, because we're in a certain market regime where the best sell setups in the world fail. So all you would need, and there you go. We should probably snap through here because we're going to have people with stops above this, and there you go. We're going to troll those stops. So all the bears just got stopped out, and that low okay, so it's a few points off this low still. There's about right here, we're going to have some stops in place. So this should be, it's not a bad place to add if you're looking to add to your position. Any other questions, y'all, or inputs?
Well, Super Trader is a super important book. And if you actually do the book and do what Van Tharp tells you to do, like don't trade a system until you have at least 30 back tests on it. Understand the R multiple distribution. Understand the regime performance. Like he has a list of questions that you need to answer about your trading before you're allowed to trade. So if you just do the book, that gets you 90% of the way there. 30 trades is light for sure, but
an hour. It's an hour of your life, maybe two. Mm-hmm. If you know what you're doing, if you know how to do a manual back test, 30 trades. If you're doing like, we're doing, I don't know how many you guys are blasting through now, but that's 20 to 30 trades an hour is certainly reasonable.
I'm a bit slow.
Okay, that's fine.
But not like, if I'm in the right mood, I could do 1,000 in a week, right?
Yep.
But I'm not like you where I could do like an hour a day and be that disciplined. It's like I block out a day a week and do it.
Yeah. Well, for me, it was, traditionally this week, last week, Thanksgiving week is when I do the most amount of, 8-hour days. Just this one was a little different with a family now. But yeah, I would do, 4 or 5 8-hour days and have 1,000 or so back tests on a completely new system during that period of time. Yeah. So Ashley, at 9:45 every morning Eastern time, Kyle puts a link to a live stream in the Slack, and they manually back test for about a half hour, 45 minutes or so. And a lot of what it's a good companion to the systems mastery course. But if you you don't have the systems mastery course, you can follow along and learn the strategy and the methodology to do the back testing and everything, how to do it, because a lot of people just don't actually understand how to do it. But now that I know that you were a fellow shipmate, you got the discipline muscles. We know it, Ashley.
Well, and speaking to those that don't have discipline, like myself, you just have to plan and block off time. And when you're in the mood to do it, and don't stop. Don't leave your desk. Just keep going. It's not the most fun thing in the world, but
you get so good. I mean, honestly, if you spend 1 hour after that, if you've never done it and you do 1 hour manually back testing, you're gonna get insights into the markets that you're just gonna be blown away. And by doing it with Kyle, he's kind of helping you walk through it, or in the courses or whatever, you see how it's done. So a lot of people have problems of just not knowing how to manually back test and what to do, and that is definitely what that is kind of a key component. But getting into it, I mean, I'll do an hour a day every day, and this is how I constantly come up with new ideas to test and to try, and I get better. The other thing is it's oftentimes more about just getting better. Like we said, the practice. There we go. Now there's the NASDAQ breaking. We hit that line. We got above that line I had over there. That was the previous swing lows. So that turns into resistance, and that's how we spike up to it, and now have a troll top potential. But being in bull quiet, we know what is characteristic of a bull quiet because we've done a lot of work in bull quiet regime. We know what is to be expected. The best sell setups fail. The best buy setups continue. It doesn't look easy, but it's easy. All right, kids, I'm going to cut the video short and go ahead.
Oh, yeah, sorry. I was going to say, just in keeping what you said at the end there about gaining ideas from the back tests. That's like, I have ideas on the side I haven't even touched yet that I've gained from doing the back tests we've been doing, even on the FEBOs, everything. And it's unbelievable what you get, the insight you get. Like, it really is. And the more you do it, the easier it becomes. And it's like a video game for me. When I attach the data to the spreadsheet, when I look at the breakdown of trades taken, win rate, SQN, like, I feel like I'm losing a video game if my SQN drops below 3. Like, like, I mean, it's not in and of it's, like Grant will tell you, sometimes I'm like, oh, what's going on here? We had a conversation the other day, but I mean, you take the trades as they are, but when you understand, when you see through the matrix, it's unbelievable. It's great stuff.
Yeah.
All right. Well, NASDAQ's doing its thing as expected. Added up. I'm going to go ahead and raise my stop. We'll raise the stop up to here to the breakout bar. So raise stop up to 12. What's the low there? 12,216. So what's low here? 12 to 1450. That would have been a good spot to trail out of, or to add in as well. I'm letting it. It's not doing as we get higher, further away from the entry. I'm just going to go ahead and probably keep my position as is. I'm not going to be. We'll see. We'll see. All right. Any other thoughts? Any other feedback? Any other questions? Any other insights? All right. Well, we'll stop recording here. This is pretty much what we do outside of we're trading and doing push-ups and all that sort of stuff. But it was kind of an overview of what we talk about in the lab during the trading day. We're already in a number of trades. We're in the Aussie CAD, failed vol breakout. We are in the NASDAQ's a day trade, and there's a palladium or a platinum trade on. So I just wanted to give some people some insights into that. Also for our people overseas who are asleep at this point in time, give them something to see. Bye.